Good morning, good morning, good morning. How are you guys doing on this Memorial Day? Before we start, I wanted to say thank you for all servicemen and family members that risk it all for our freedoms here in America, or even around the world, to be honest with you. But just want to say thank you in that regard. So today we're going to be talking about Bollinger Bands. I use my Bollinger Bands a little different than how other people use them, but I kind of want to explain to you first, educate you what a Bollinger Band does and how you can use it and what time frames I use it on, because I use it on multiple time frames. So let me first widen the screen to really break down what a Bollinger Band is. So if you look at this shaded area, let's start with the weekly. We're going to look at the SPY because the SPY is pretty much the stock market, right? So what this is the Bollinger Band has a midpoint. And the midpoint that I use on all of my Bollinger Bands is 20, the 20 moving average. So what a Bollinger Band tells you when a stock gets to an extreme point where not saying you can expect a reversal, but the probability of a reversal coming back down is more than likely. Because now your stock has reached so far beyond the 20 moving average. So most stocks, from my experience, they tend to trend up, but they trend up within a range with the 20 moving average. So when it gets outside of that range very far, then it either stops and waits for the 20 to catch it. It either snaps right back to the 20, or there's a combination of a little bit of down on the stock and a little bit up on the 20 so they can meet again. But the Bollinger Band tells you when I use the term overbought, meaning it's above the Bollinger Band on the top side, or oversold, meaning it's been oversold below on the bottom side. The Bollinger Bands that I personally use, and I'll show you my settings. So most Bollinger Bands, when they come in, I'll show you the edit real quick. Most Bollinger Bands it's the shaded area. I like TC2000 because I can manipulate it. Normally, you could change this to 50. Like, I'm gonna show you what it looks like if you change it to 50. You can see it in the background. That's 50. You see how it gets a little wider and different things like that. So let me put this back. So you can change it to whatever period you like. I like the 20 moving averages because I use the 20 moving average for my trading. So I want to know the extremes of the 20 moving average statistically. So what that comes to is 20. And when the default set on any Bollinger Band is typically 20 by 2. Two standard deviations, I believe, is a 95%. I believe it's 95%. Yeah, I think it's 95%. But I increased mine. Let me show you what it looks like when I put it back to the default. The default is 20, right? I mean, 2. So let's put it to 2. All right. You see how it kind of shrunk it down a little bit? So for me, I tend to find out that 2 is okay, but it hits it a lot. When it gets to 2.5, which means 98%, 98, 99% of the time, now we are absolutely extreme points for that particular time frame. Okay. So the reason why I use multiple time frames is because the weekly computers might kick in if it hits the weekly Bollinger Band at the top, the daily, and then intraday. And I found a lot of times when I hit an intraday 4 hour Bollinger Band for that day, especially if I'm near, I talked about average daily range and average true range. If I'm near the average daily range and I'm hitting a 4 hour Bollinger Band at the top, more than likely that trade is probably done and I need to start dropping down to a lower time frame. If it keeps going up, it keeps going up. Now that's another thing. That's one myth. Just because something hits a Bollinger Band does not mean it's going to turn back around. All the Bollinger Band is a yellow light. It's not a red light. It's not a green light. There are a lot of things that are red lights and green light, like breakouts are green lights and major supports are red lights. But Bollinger Bands are just yellow lights, warning you like, okay, you're getting to a point where this stock needs to move. And I'm gonna show you a couple of chances. Now, this is the weekly. And if we look at the weekly, I'm gonna pull it back and you'll see different times where it might have touched. And there's one more myth about a Bollinger Band. So I'm gonna break that down to you in a second. But let's just look at it. You see how this is the SPY over a very long period of time. Let me shrink it back. Uh, okay. Okay. So we went all the way back to what 2020, right? So if you look at this, how many times does it actually really touch the top of the Bollinger Band on the weekly? It gets close here. It doesn't touch there. Boom. It starts touching here. You see how it starts getting up into the top of this Bollinger Band? Then all of a sudden, it's not saying to turn immediately. You still got to use your rules to find out your entries, but it's telling you it's getting really toppy and then it drops down. But look what happens. When it drops here, it touches the bottom Bollinger Band and bounces. It does it again, and then it kind of bounces, then it comes down again and it bounces. So this is another thing, that another myth that people have to understand is when you hit the Bollinger Band, it doesn't mean that the trend is going to reverse. What it means normally is it's trying to get back, it might try to get back to the 20, which this is exactly what, this is perfect. It hits the Bollinger Band, it goes to the 20. Hits the Bollinger Band, it goes to the 20. Hits the Bollinger Band, it gets close to the 20, but it's still trending down. So you still got to understand what the trend is. Then it hits the Bollinger Band once again, comes right back to the 20. So this is what it's telling you. This trading is called regression to the mean. And the Bollinger Band helps you identify the location where that regression should occur. Now, one thing about Bollinger Bands, they're constantly moving. So even though you hit it right here, it might widen some more for you to bounce and then turn back down some more. Because as you see, it keeps trucking down even though this particular stock is going up. Now, this is a weekly Bollinger Band. So let's see when the last time the Bollinger Band actually hit. Let's see. Hold on, let me shrink it up so we can see exactly what happened when it hit. All right, let me shrink it up a little bit more in case you're looking at it on your phone. I know it's a little difficult, but just try to teach you guys some things, just to keep it real simple for you. Okay, so, oh, here we go. This is the perfect one. The Bollinger Band here at the bottom, it literally hit the bottom of the Bollinger Band and hit and created a trend line. What date was that? That was the week of that was October 27th, October of last year. It Bollinger Band hit, boom, and as soon as it hit that, not only did it get back to the 20, it started a rally. So I'm telling you guys, knowing now I use this. A lot of people like to use RSI and MACD and different things like strength index. I don't like those just because too many times when I tried to learn how to use it, it didn't give me fake indicators. I just didn't get what I wanted out of it. It just kind of, now, one thing that's cool is anytime I'm overbought or oversold on a Bollinger Band, it's probably going to show up on your RSI. But for me, the Bollinger Bands were a little bit more exact because every single time it hit and it touched, I tend to get some type of reaction, even though I wouldn't trade off of it. This is not something you trade off of. This is something that gets you prepared to trade. So this is you have leading indicators, you have lagging indicators, and then you have real-time indicators. I consider the Bollinger Band a leading indicator. It's warning you that something's going to probably occur sooner than later. And I like those indicators. My Heikinaichi candles, I consider those real-time indicators. And then moving averages for me are lagging indicators because the moving averages start to move after a lot of data has come in, but they're very useful. So that's what a Bollinger Band is. So I look at the weekly Bollinger Band 20. I have an alert every single time any one of my stocks hits the Bollinger Band overbought or oversold on a weekly, I get an alert. Then I go to the daily because sometimes I need to know which one's going to take over. Now, if you look at the daily, the exact same thing. Look right here. It comes up here, it touches it, but that doesn't mean to go short. It just means get warning that we might be either going sideways or we should be coming down. The next day, it went up there again. Then that following day, it came down. Then it got kind of choppy. The 20 moving average caught up to it. So this is exactly what I'm talking about. It went choppy sideways. 20 moving average caught up to it. And then boom, from there, it started to trend right back up again until it started riding out again. So that's what I'm talking about Bollinger Bands. It doesn't tell you to stop trading. It just tells you where you are on the chart and how far you are from the we call this home base, the 20 moving average. This is how far you are. So I have an alert that goes off every single time I get a Bollinger Band touch on the weekly, the daily, and then for more intraday purposes, the 4-hour. Now I don't go out. Now, if I were scalping, I would do. If I was scalping, I would do the 1 hour, but I don't scalp. I kind of intraday swing trade. So even on here, so if you see the market opens up here and it opens at the top of the Bollinger Band on the 4-hour, from that point it just kind of went down the whole entire day, waiting for that kind of like 20 moving average. Here, did it again. Boom. It dropped down hard early in the day. I think this was like probably what time was this? Yeah, it dropped down hard in the end of the day. Then it bounced off of that, got back to the 20. That's all it's telling you is where the regression to the mean occurs. Now, you may have something like this where it bounces, it just doesn't bounce enough and it just keeps gliding back down. That's where you cannot trade off of this. All you can do is get warnings off of it. And then when you do get that hit and you get a little bounce, you might put a good strategy would be put a line at the bottom of this candle. So if the bounce does not continue and it starts to turn back down again, when you break the bottom of the candle that got past the 4-hour Bollinger Band, then you could jump back in that particular trade. Because some days it's just going to keep going down. That's just the reality of it. But for the most part, over time, nothing is 100%. But over time, I've seen a lot of times where just like this one, boom, gave me a beautiful candle here. That was an exhaustion candle off the Bollinger Band. Boom, let's get back to the 20. That's literally exactly what it did. Then it gave me another exhaustion candle saying we hit the 20, we spiked through it, we bounced back up again, let's go again. So those are the things that you need to kind of know and implement into your trading because you don't want to go long. If you're sitting at the top of a Bollinger Band and it's 2:30 and it's 3 o'clock and you're at the top of a 4-hour Bollinger Band, why would you go long at that point? It doesn't make sense because the likelihood of it is there's probably going to be a sell-off to get right back toward that 20 moving average. It's just not worth the risk. You could just look at it and say, you have to be okay with saying, I don't like that trade right now. Let me look at it tomorrow when the Bollinger Band fixes itself. So that's all Bollinger Bands are. Now, just a recap. I use 20 by 2.5 standard deviations. I don't use 20 and 2 standard deviations. Mine's a little more, when it hits mines, I'm really at the extremes. And I use a 20. I don't do the 50. I don't do the 100. I use a 20. And I think the 20 is what works and what I've seen that works over time. So that's kind of how you use Bollinger Bands. I think it's a great indicator to implement into your system just to kind of know when you're too extreme or if you have a little bit more room to keep going. And as you guys look at some of my analysis on some plays, I always bring it up like, okay, this has a little bit more room to go up or not because I'm looking at where the Bollinger Band is, meaning we're not at the extremes as of yet. So I hope this kind of helps you guys out. If you guys are kind of wondering what a Bollinger Band is, and this is just kind of how I use it. I kind of want to talk about theory, but I also want to make sure every single time I talk about a particular topic, I want to show you the practice of it, not just what a Bollinger Band is, but I want to show you exactly how you can actually use it and implement it in your system. Now, there will be certain things that give you confirmations that you might be counter trending back down, and you can absolutely do those trades. Now, that'd be different things that you can use, different type of candles, a lot of different things. Right now, I just want to kind of explain to you the basic form of how to use a Bollinger Band, how to use a Bollinger Band, what it means, and how to implement it into your trading strategy. All right, have a great holiday. I'll have some more videos out for you guys tomorrow. I just wanted to say have a great holiday, and we do have class later on tonight. Have a good one. Thank you.